Hi, this is Ken Long from Tortoise Capital Management. It's August 4th, 2009. I want to give a quick demonstration of how to use the Etf2 Turbo technique to prepare yourself to trade market trends as they occur during the day and during the week. ETF2 is a weekly adjusted asset allocation trading strategy that analyzes the price performance of over 700 ETFs every week, spread across the world in all sectors, all regions, all countries, all areas of the business cycle. It evaluates them on the basis of current strength, consistency over the last 10 weeks, and quality performance, which is a function of return and volatility. We start with a review of the broad indexes. We see SPY, the S&P 500, is in bull quiet mode. We know that is very, very favorable. Next, we see that EFA is better than SPY. EFA is the Euro-Asian Index, and at 63 average rating, it's better than the US's SPY, which is rated at 59. So we know that global markets are generally stronger than the US market. In the US, we see that mid caps are better than small caps or better than large caps. We see that Japan is the weakest region at 59, and Asia less Japan at 72, and emerging markets at 70 are the strongest. The 72 in EPP, Asia less Japan, is significant because that's in about the top 15% now of the entire global market model. So that's our general setup. Our allocation strategy: last week we were 100% invested, 0% cash. This week 100% invested, 0% cash. That means we are full speed ahead, all systems go, looking for strength in global markets. Now, specifically, what we have here is the prototype model. We can see that we're about 100% invested, and we're looking at preferred U.S. stocks, China, coal, Taiwan, China top 25, semiconductors, Latin America, U.S. technology, and Chinese real estate. Now, today, SPY, which has been up for 12 days in a row, returned a 0.14%. And you can see all of the elements of the world market model, with the exception of U.S. technology, outperformed that in a dramatic fashion. So one of the things that it is usual to see, is that on up days in the market, that the ETF2 positions dominate the U.S. market. They're more volatile, and that's good when they're up. And every one of those has been outperforming the U.S. broad market by a wide region. So on a day like today, when we see the U.S. gap up and then keep marching up, it is a relatively easy thing to do to go to this list of existing ETFs that are already owned on a weekly basis and look to add to them at moments of tactical advantage. That's what we call ETF2 Turbo. What we're doing is having no overnight risk, waiting to see what the market's going to do on evidence of strength after the first hour. When the market has settled down, look for ones that are outperforming SPY today, and look to buy with tight stops with the intent of cashing that position sometime during the day. Is it possible to hold it overnight? Sure it is, but we're going to hold a wider stop if we elect to do that, based on the overnight gap statistics. But that's a story for another movie and another night. So that's ETF2 Turbo. Thanks for your attention.